The first Bitcoin-linked exchange-traded fund has debuted on the New York Stock Exchange, with more than 20 million shares changing hands on the first day of trade. The launch coincides with the Senate report here looking into digital asset regulation. Nick Abrahams, Global Head of Technology and Innovation at Norton Rose Fulbright, says the overnight debut is a big deal for the sector and is only a matter of time before Australia offers a similar product.
Oh, look, I think it's massive for the sector, and all you need to see is what happened to the Bitcoin price over the last month in anticipation of the ETF listing. Bitcoin rose over 45%. And so what we see with an ETF in the US, now we've got two in Canada, we've got one in Brazil, is it enables ordinary people to invest in cryptocurrency in a regulated way.
Well, Nick, the SEC approved the ETF on Friday. How are regulations in the US different to the ones here?
Yeah, so the SEC has been a little more flexible than what we've seen with ASIC and the ASX in Australia. So what's happening with ASIC is they've got a number of ETF applications already for crypto ETFs. They are holding on those for a moment, and they've got a consultation paper out with the industry. We're expecting the report to come back from ASIC at the end of the year, and we'll wait and see. But ASIC has generally given positive vibes that it's looking like it will say yes to crypto ETFs, but we've got a little ways to go yet.
Well, Nick, you mentioned Canada has two crypto-backed ETFs, Brazil has one, and now so does the US. Is it only a matter of time before we get one here, or are there other laws preventing that?
Yeah, no, I think absolutely it's a matter of time. I think we'll see ASIC go through their consultation process. We'll see that report later this year. There will have to be, I think, some changes in the way the ASX has its listing rules. And so I would expect to see an ETF in Australia within 6 months for sure.
Now, Nick, a report was tabled in the Senate today looking into regulating digital assets. Has it covered the right areas, and has it covered the most pressing issues for the sector?
Well, look, I think that the report is disappointing in some ways, but maybe to focus on the positive. So I think couple of critical areas that it has addressed, which are very important. The first being digital currency exchanges and regulating those. So that is the way a lot of people buy cryptocurrency, and it's an unregulated market right at the moment. So some good points made about digital currency exchanges. I think also the report deals with this concept of trying to build a custodianship based industry for cryptocurrency and digital assets in Australia, and providing a regulatory backing to that. And holding crypto assets is quite difficult because of the nature of the asset. And so a big opportunity for Australia from an economic point of view to grow our existing custody businesses, which we have in the superannuation area. We can grow that into the crypto space. And then I think the other major area that they've looked at, which I think is very important, is things like the DAO, Digital Autonomous Organisations. That's very far-reaching. So I think some very good aspects to the report.
So, Nick, will the proposed regulations lead to efficient, well-informed markets and an environment where innovation can thrive and not be driven elsewhere?
No, I think that unfortunately the report has missed one of its key goals, I think, which is, what we were looking for is really a vision for Australia to be a leader in the region and indeed the world in relation to digital assets. And by having good digital asset regulation, you can have a thriving market. And the report didn't deal in enough detail, I think, with the issue of how do we regulate digital assets? Are they a financial product, in which case you have a product disclosure statement, and so forth, or are they regulated in some other way? And so what the report did was to really kick the can down the road with that and say there's going to be a token mapping exercise, so they'll see what tokens are out there and figure out how to regulate them later on. And I think that was really one of the core things we needed answered to a degree of detail with the report. And unfortunately it fails to do it. And doing a token mapping exercise feels a little bit like we're looking in the rearview mirror when we should be looking through the windscreen.
Nick Abrahams, thanks for your time.
Great, thanks very much.